A very good morning to all our viewers. Welcome. You're watching a morning trade live here at Moneycontrol. I'm Stacy Pereira and I'm here to help you navigate this trading day with all actionable trading strategies as well as sectoral trends that you should be looking out for, and most importantly, your queries during the course of the show. So guys, keep commenting on our live feed and we'll have them addressed by our guest on the show. But before bringing them on board, let's see what the global handover has been like and let's look at what's making headlines. The Nasdaq and S&P 500 hit their highest in 13 months on broad-based gains as Wall Street bets on the Fed being close to completing the rate hike cycle. All three major indices end 1% higher. The S&P 500, in fact, reporting its longest winning streak since November of 2021. And European markets closed largely lower after the ECB raises rates by an expected 25 basis points as inflation remains well above its target. The bank also turns more cautious on growth, lowers its projections to 0.9% for this year. And stocks in Asia Pacific open mixed ahead of the Bank of Japan's policy decision, while the SGX Nifty is indicating a higher start for the Indian markets. And India's trade deficit widens to a 5-month high of $22 billion due to higher goods imports. Exports to have fallen by about 10%, while imports declined by 6.6%. Exports contract for the fourth month in a row due to global slowdown. And cyclone Biparjoy makes a landfall near the Saurashtra-Kutch coast. The storm is likely to recede to the depression by this evening. So far, 2 people have lost their lives and 22 have been injured as heavy rains and winds lash the coastline. Well, so that's a lot of data that we've got through the week, and which is what investors and traders are really digesting to see what the pointers are really telling us. We did have the Fed, which has gone ahead and pressed the pause button. We have the ECB on the other side, which has gone and hiked rate by another 25 basis points. And you do have the Fed saying there are more hikes coming in. So what sense and what direction are the markets going to take from here? And most of all of this macro data, is it quite favorable for the markets, and how are they reacting? We did see a bit of consolidation in this week, but also still inching towards those all-time highs, at least for the Nifty 50. So what will be the next triggers or headwinds for the markets? Let's discuss this with Dipan Mehta, the founder and director at Elixir Capital. Sir, thank you so much for speaking with us this morning and joining us live. How are you sensing, and how do you think all of this data that we are digesting is really going to play forward? You do have ECB that has gone ahead and hiked rate, but you did have the Fed that has paused rates, and you have the Indian RBI also, which has said we are going to let and see how this all plays out, whether inflation will actually get tamed. So how are we reading all of this macro data at this point?
Yeah, good morning, and thank you for having me on your show. I think the worst of the inflation is behind us, and a lot of the central bank posturing is trying to, build the expectations that we are vigilant, that in case inflation again starts to spike up, then we will again raise interest rates. They're just trying to put up a strong guard so that we don't get lackadaisical about the present situation. But as I see where commodity prices are moving, the way food prices are moving, and most importantly, the base effect, I think that's going to start coming into play. Keeping all of that in mind, I think inflation will soften going ahead, and that will give some flexibility to central bankers to maybe pause on interest rate increases or even push them many quarters down the line, or in some instances, like China has done, to do away with interest rates and look at a situation where they can do increases and reach a situation where they can actually go and start to decrease interest rates. So we are in a good situation as far as inflation interest rates is concerned. That has been the biggest cloud over the markets for the past several quarters or so. But we are seeing the end of it. Even geopolitically, I think things have settled down and there are no fresh threats over there. And the way the FI money is coming into our country, it does suggest that globally there is a risk on trade taking place. And that's always very beneficial for emerging markets such as ours. So I'm very positive on Indian equities, and it's just a matter of time before we hit all-time new highs.
Absolutely, we are in fact we are looking forward to hitting that all-time high, and can happen anytime soon. Literally been a countdown for the past 2-3 days, in fact. But let's look at other data points. We did have our trade deficit, which did come in yesterday, and we've reached that 5-month high, $22 billion. And we've seen also exports kind of contract and slow down now. Is that telling, and will that kind of disrupt our fiscal position, especially in a year we know we're getting into an election year also? So is that something to be watchful about?
Yeah, of course. I think I look at the current account figures very closely. And end of the day, that has an impact on the Indian rupee, the forex rate. And if there is a depreciation in the Indian rupee, then that's negative for inflation. So yes, I think one should keep an eye on it. But the way the foreign money is coming in on the capital account, I'm not that perturbed at this point of time. But certainly, it's a marker. It's a bit of a warning that we shouldn't be having such large trade deficits for an extended period of time. But right now, I think the threat is contained, but we need to be watchful about it.
Right, Dipan, what about sectors within the Indian market? So what is specifically looking good at this point? We do have data that has come in, rate sensitives. We were trying on playing that wait and watch game, but we've also seen a lot of action within the pharma space. How are you looking at these sectors, or any sectors that we should be looking out for at this point?
See, I think pharma one needs to be very selective, because a lot of the large Indian pharma companies have too much exposure to US generics and rest of the global markets, which have become commoditized, for lack of a better word. And they are facing intense competition over there. Price erosion and new product launches is not enough to cover the kind of pressure on margins because of lower prices. So I'm a bit skeptical about large pharma companies, the likes of, say, Dr. Reddy's, Cipla, Lupin, for that matter. Sun Pharma has a slightly differentiated business model focusing on specialty products. So that's a company which is on our watch list. But most importantly, we want to focus on companies which have got large exposure to the Indian pharma market, like Mankind Pharma, the new listing, JB Chemicals, Eris Life Sciences are three companies which come to mind, apart from the MNC pharma companies which are focused on the Indian pharma market, where I think you can still expect a secular growth in the low double digit in terms of volume. So we are positive on those companies, but not that much on the larger export-oriented pharma companies.
Dipan, what about IT stocks? Now, that is also something that has seen quite a bit of flip-flops. It did have that, everyone waiting in to see how the American counterparts react to a Fed's decision. So how should one be looking at IT stocks? Because they're seeing quite a bit of, on one day they are the top sectoral gainers, the next day they're really down and about. So how should one be reading this?
See, I think IT companies, again, you need to be selective like you have been with pharma stocks. And there are going to be some companies, especially those focused on key verticals, where there's going to be hardly any cut in tech spending, like, say, automobiles or media for that matter, healthcare, to an extent, travel and tourism. I think those particular verticals, we can expect least amount of spending cuts. But BFSI, retail, to an extent, manufacturing, that's where you could have some demand compression. And on the whole, I think large cap IT stocks will be more pressured than mid cap, because for large cap IT stocks, they have the handicap of a large base. And unless they don't get really large transformational multi-year, multi-million-dollar deals, to sustain growth rate becomes a challenge. Whereas smaller IT companies with even smaller deal sizes ranging from $10 million to $30-40 million can sustain decent growth rates. So we're very positive on the mid-cap IT stocks. We expect them to outperform the large-cap IT stocks and the IT index per se. So one has to again be selective over here. Companies like Tata Elixir, Persistent Systems, Coforge, and KPIT, I think, have a very aggressive strategy. They are focused on very specific verticals. They add a lot of value to their clients. There's a high degree of customer stickiness over there as well. So I think these companies will, of course, be impacted, but the impact may be marginal.
Right, Dipan. I also think there's a lot of talk about AI and how these companies are really getting on that bandwagon when it comes to AI and not being left out So that is good, shifting their focus, one could really say. But thanks so much for giving us your time, Dipan Mehta there of Elixir Capital, speaking with us. Let's also look at a couple of other stocks, especially in the auto space. We did have Ashok Leyland, which had its investor meet, and post that we're seeing brokerages come out with their reports where JP Morgan has an overweight rating on the stock with a target price of 175 per share. Now they say that expansion will also foray into less than 2-ton segment for their LCVs, and they have a strong focus on the margin improvement as well as the price discipline in the CV industry, which continues. Now new energy portfolio will also be ready in the next 24 months, and these are the factors why JP Morgan thinks that the company will do well. Now the company's modular platforms will accelerate and transition into that alternate energy vehicles, and which is why that neutral rating is what they're also keeping. And we also have Morgan Stanley, which has come out with their report where they are holding a neutral rating when it comes to Ashok Leyland with a target price of 155 per share, very different from what JP Morgan was doing there, where they think that the management seems optimistic on their commercial vehicle demand in India for Q1 FY24, and they also expect it to be flat on a YOY basis. Now, the management does see the medium-term opportunities for about 35% in their M&HCV vehicles, the medium to high commercial vehicles, but also sees a 25% for their light commercial vehicle when it comes to the market share. And this is what has really kept the optimism there for these brokerages on Ashok Leyland. The counter there on your screen is also quite positive, and we'll see how they react to these brokerage calls. But let's discuss some more stocks and also take your queries. Joining me now is Raja Venkatraman, the co-founder at Neotrader. He's also a trading influencer, and he's here to read a couple of charts and key levels that we should be looking out for. What are the technical charts really telling us? Raja, also give us a sense of what are the near support and resistance levels we can be looking out for in the Nifty particularly.
Yeah, good morning. See, the entire market is right now quite pressured at the moment, and one of the reasons is that the weakness in Bank Nifty is persisting, and at higher levels, 44,500 is what was the resistance zone. So now that resistance has moved towards 44,000, where there are a lot of call writing which is happening. And when you take a look at the markets, yes, the markets are trying to revive. We are trying to hit new highs, but then the overhang in Bank Nifty and the kind of bearishness which we are seeing in Bank Nifty could actually challenge this particular moment which we are waiting for. Now, when you are going to talk about the levels, yeah, there is a good put writing happening at around 18,700. So as long as 18,700 holds in Nifty, the whole bullish momentum should continue. But if 18,700 were to give away, then we could expect further downside. So at the current juncture, the levels which I am looking out for is 18,700 in Nifty as an important support, and on the upside 18,900 in Bank Nifty, 43,500 and 44,000. So these are the levels which I'll be watching out for today. And considering the drift which we are having in the market right now, we can see that this has been largely attributed to the HDFC twins and the kind of news flows which are emerging as far as the share percentages are concerned.
Absolutely.
That is causing some bit of worry to the investors, and that could play a drag on the overall market sentiment as well. But then the mid caps are and small caps are firing, as we can see a large investment into that by the FIIs as well. So we can consider that yes, the retail participants are very much in the thick of the action. So
right. In fact, the broader markets is where the party is right now, because everyone's kind of shifting focus. They are the ones, those are the stocks that are really giving some bit of returns, and which is why even retail investors are not really looking at only your blue chip, but also looking at mid cap and small cap stocks at this point. But let's take in a couple of queries. We have Prabhu's asking us on IEX, is it the right average if you're there about 150? Also, yeah, a lot of queries on IEX and whether one should hold or exit. We've seen that stock also have quite a bit of swings, but closing on the positive yesterday, up 1%. A lot of news flow that came, that contra call from UBS as well. What's your take on IEX?
So IEX has been largely quite flattish at the moment, and if one were having a position, then you should look to exit below 120. Otherwise, one could look to hold on. But then, if someone is asking me whether I should be investing into it right now, then I would say that there are better opportunities.
Right. What about there's another query coming in from Rakesh Gupta. He's asking us about Inox Wind Energy again in that space, and something that has been seeing quite a bit of news flow after the company decided to merge the other one with itself. He's asking whether the Inox Energy shares will be issued at the issue price of 54, and how should he be looking at this whole merger that they've called for.
Yeah, so this entire stock, after its good run in 2022, it went into a bit of a decline, and then right now the fresh momentum is seen emerging. Positive tailwinds are also there, so one should look to hold on to this counter because it has got potential to double in the next 1 year.
Right, so IEX something to hold on to. Well, do stay on with us, Raja. We'll look at a couple of other things that are going to be making news today, and one for sure is the new kid on the block, that is IKIO Lighting, which will list on the bourses today, June 16th. That is now the LED maker. It's made in public issue, which was subscribed by 66.30 times during when it was open for subscription from 6th to the 8th, and we saw the qualified institutional buyers or QIBs, their reserve portion being booked by about 163.58 times. The high net worth individuals, they put in about 63.35 times they invested, as well as the retail portion that saw a subscription of about 13.86 times. Now, the issue is trading right now at that grey market premium of about 32%, but it did see some bit of flip-flop even there. So definitely something to be looking forward for. We saw primary markets quite dull for some time, and now that we're seeing all of these SME IPOs also coming in, there is some bit of action for somebody to get into. So let's ask Raja once again what he thinks of the IPOs that are coming on the market, the new kids on the block. Will we be seeing how are shareholders' money? Is it a right time to be putting into money into IPOs? How should one be viewing this?
Yeah, so considering the way the entire market is favoring the bullish sentiment, yes, it would not be a bad time to put it into the IPO. But then, whenever it comes to the IPO, I always believe that yes, you should have a portion of your money putting it into the IPO, and you should not invest your entire funds into any IPO. And when you are going to participate in the market, apart from IPO, there are other ways also to participate. So yes, you need to participate, but then not in 100% of your entire capital.
Well, yeah, so that's maybe caution should or weigh your options, one could say, when you're looking at these IPOs. Let's get in another query then. Mohit Anand is asking us about HUDCO as well as NHPC. Is it a good time to be buying these stocks, and what is your call on them?
Yeah, so what I'm noticing is that of late with the government's initiative into construction power sector, so we are finding that lot of the EV theme is also once again picking up. Now what you can see is that these kind of sectors are going to flourish, and one should look at these stocks to participate. So when you're going to look into the power sector, there are better stocks than this, which you can, if you want to concentrate into the power sector. RECL is a stock which I would recommend, is a good opportunity you can consider. PFC is another one from the power space, and BHEL is also doing quite well. So these are some stocks which you can consider instead of NHPC.
Right, so that's the word on HUDCO as well as NHPC. But another stock that is a buzz is that of Torrent Pharma. Now, the US FDA has issued an establishment inspection report for the company's oral oncology manufacturing facility in Bileshwarpura in Gujarat. Now, the inspection of the said facility has been successfully closed by the FDA, and which is why we're going to see some bit of action. And we did speak about how the pharma space, is seeing its ups and downs, and one really needs to watch out for. Well, let me before I wrap, let me get in a word from Raja, his final stock calls, or what he would like to recommend our viewers today.
Yeah, so I would like to go in with a long as well as a short, because considering the way the market is poised right now. So I would like to go with a sell in Eicher Motor at current levels with a stop loss at 3580, for a target towards 3510 and 3490. And I would like to go in with a buy in Asian Paints, considering the way it is benefiting from the lowering of the crude oil prices. I would go in with a buy in Asian Paints at 3300 with a stop at 3268 and for a target towards 3350 and 3375.
That's right. So one buy call and one sell call. Eicher Motors is a sell for Raja, whereas an Asian Paint is a buy. Well, seems like that's all the time we have on this edition of Morning Trade. I'd like to thank Raja Venkatraman for giving us his time and also giving us his recommendations when it comes to stock picks. If we haven't answered your queries, please do keep them coming, because we will be taking them up on another day. But seems like that all the time we have on this edition. We'll be back with a lot more on Monday morning. Coming up next is a Morning Bell for you.